Hey, what's up, guys? John here. One of the biggest scams ever sold to the real estate industry and the housing market was this big story of there being a housing shortage. Well, what people are going to see over the next 6 to 12 months is going to be unbelievable. We're already starting to see it right now as we are looking at apartments right now under construction at a 50-year high. A 50-year high with over 461,000 units expected to be delivered just this year. 461,000 units in the next 3 months that are supposed to hit the market. And we're just going to see more and more and more of these developers trying to unload this inventory in this market. And I think it's going to present a unique opportunity to smart and savvy new real estate investors who want to get into the market in 2024 and 2025 as we start to see a lot of distress hit this market that we haven't seen, in my opinion, probably ever in history. I'm going to break it down for you clearly with verifiable facts as to what's going on, because this is unbelievable. Hit the like button. When you hit the like button, YouTube will share this content to educate other people about what's really going on in the housing market. And if you want to fix your credit, you want to position yourself for the greatest real estate wealth transfer of all time, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, anything negative that's impacting your credit report, don't let it sit there. Go to GreatCreditFast.com, book a free strategy session. Take a look at this. So this is unbelievable. Right now, our rent's falling. Apartment associations sees construction weak demand causing negative growth. Well, I did a video saying the rental market flipped, and this video came out October 3rd, 2022. So almost 1 year ago. And in the description of this video, I said we will witness rents collapse in the short term as home sellers turn to renters, right? Then this came out March 13th this year. So 6 months after I put that video out, they said homeowners who had a 3% mortgage are becoming accidental landlords, right? They turn to renters, retirees to landlords. And now it's public information that half of all retirees that retired during 2020 to 2023 are already living on the verge of poverty, right? So a lot of these people are going to start renting out their homes. People lost their job. They may soon be able to rent out their homes because, they're not going to have the equity in their properties to hold on as interest rates continue to rise, was my premise in this video. Airbnb investors turn to long-term rentals or long-term landlords, and everyone as a whole listing their home for rent simply to avoid losses. Real estate is entering a period where there's little inventory and rents are skyrocketing, and now rents are falling and inventory is going to multiply, right? That's exactly what is happening at that time. Inventory, very, very scarce. It's still very, very scarce. But rents were increasing at the time of this video. Now rents are starting to come down in a pretty unique way. But here's what I think is going to happen. So right now it says more than 40% of all mortgages 40% of all mortgages in America taken out between 2020 and 2021, when the pandemic drove borrowing costs to historic lows, right? So you think about this. As this labor market starts to contract, what are we going to start to see? You're going to start to see all these people say, I don't want to let go of this 3% mortgage. I don't want to let go of this 4% mortgage. I can't sell it if I want to. I'm going to list it for rent. You're just going to start to see all of this supply hit the market. And as this is happening, they are loosening up zoning codes nationwide to allow for office to residential conversions. And many people are going to say, John, that's not going to happen. It's too expensive to do these office to residential conversions. I just typed this in, office to residential conversions. Look at just the last week, right? 6 metros that are finally feasible financially feasible for office conversions. 157 unit office to residential conversion. Mayor Adams direct proposal convert office to housing. Infamous San Diego high-rise office to apartment conversion 5 days ago. More than 50 Dallas-Fort Worth office properties recommended for residential conversions. New study. LA, the first nationwide for apartment to office conversions. How 2 New York City office towers transformed over 1,000 apartments, right? Offices into 1,000 apartments. You just start looking at this. There's a housing shortage and an office glut. So why are there only 217 office to residential conversion projects in the pipeline 5 days ago? This is what they're going to start to do. They want to push everybody into cities, right? They want to push everyone into cities. You have all these office buildings with massive, massive loads of debt, and you have Jerome Powell coming out saying that higher rates may be needed, right? That they're prepared to hike rates. So they're going to put more pressure on these building owners. That's what they're going to do. More pressure on these building owners. You have $1 trillion $1 trillion in commercial real estate loans coming due the end of next year. right? $1 trillion, 2.5 trillion by 2027. That's 1 out of 10 commercial properties in this country has to get refinanced. If you don't know what that means you have to go back to the bank. They're going to look at the income of the building, they're going to look at your expenses, and they're going to decide if they want to give you the loan again or not. Or what they're going to loan you. If they say no and you don't have any other type of financing, you got to give the keys back. I did a video yesterday talking about David Sachs from the All In podcast. He's worth a couple $2 billion, owns a $15 million property in San Francisco. The bank, he has a $9 million loan on it. The bank was only willing to offer him $2.4 million. $2.4 million on a $15 million property. So you're gonna see a lot of people stepping in, acquiring these office buildings, and they're gonna start converting these properties. That's what I think is gonna happen. So if you look at all these variables, you have all the people that purchased properties between 2020 and 2021, all of these accidental landlords. You have a record high of apartment construction, 50-year high apartment construction. You have the retirees that are going to need to kind of try to figure out how they're going to make ends meet. I mean, think about how expensive the world is right now. People are baking in their retirement plan on a 2 or 3% inflation environment. Inflation is through the roof, and it's likely only going to get much, much worse. So you're just going to start seeing more inventory hit the market, especially, job market's changing, the economy is changing. You're going to see rents start to really come down. And so when we look at what Blackstone is doing, just raised that $30 billion real estate fund, $30.4 billion real estate fund, primarily focusing on rental housing, right, and hospitality. Lab office data centers is what they're doing. And institutional investors, they're saying that they're going to own 7.6 million single-family rentals in America, 40% of the market by 2030. So think about this. What would be the easiest way in which they would acquire 40% of the market share? Would it be to go out there right now and compete with this high interest rate environment? No. They want to see rents fall. They want to see rents fall in a very, very big way. Because as rents continue to fall, that's going to put more pressure on landlords. The more pressure there is on landlords, the more opportunity there's going to be in a high interest rate environment for them to step out and acquire tons and tons of property. Then once they have, a large block of the market share, they can control rents. And when they can control rents, they control you. And so that's what's ultimately going to happen. They want rents to fall in the short term. So what I think is going to happen is I do think rents are going to fall substantially over the next 12 to 24 months. And I think it's going to push a lot of landlords into big, big trouble. But then I think what's going to ultimately happen is rents are going to really start to pick up. So pay attention to this because it's going to get unique. There's a few things also hitting these landlords right now that are trying to weather the storm. There's a big saying in private equity, it says survive until 25, real estate private equity, survive until 25. You have insurance and taxes going up, rents falling, borrowing costs going through the roof. This is probably the worst time to go out there on LoopNet and try to buy a multifamily property at a 4 cap or a 5 cap because rents are going to likely drop and push all those buildings into the negative cash flow territory. We're going to see a mass repricing of assets. There's no doubt about it. I mean, look at these mortgage rates. 8% right now. 8% mortgage rates if you have a 700 credit score, right? This is, just traditional residential mortgages. So when you're looking at commercial properties and you're looking at what they're going through right now, I'm telling you, we're going to see some real pain in this market. Way worse than 2008. There's way more liquidity that's being pulled out of the market today than in 2008. There's way more debt. Whether we even look at, consumer debt, whether we look at real estate debt, we just look at what's going on globally in this economy. We're witnessing something huge unfold here. So I do think there's going to be massive opportunities to make a fortune, but I think that there's going to be much more potential being patient right now, doing your homework, looking at these markets, really looking at data, putting yourself in a very, very strong position so that you can get financing instead of out there and trying to acquire deals for pennies on the dollar. I mean, right now, most of the 2, 3, 4, 5 unit apartment buildings, who are they owned by? Mom and pops. It's the deli shop owner, it's the barber, it's the bartender, that bought a property years and years ago. It's the small business owner, it's the everyday American, right? And what does the everyday American do when things start to get really, really tough? Well, they sell. That's what they do. They sell, right? That's why there's all this money on the sidelines. That's why there's very, very little activity happening from Wall Street right now, because they know that the bloodbath is coming, and they want to be sitting on a mountain of cash so that they can roll this cash over America. What do you think about this? Drop below, hit the like button, add me on IG, and if you want to fix your credit, you want to position yourself for the best financing available. If you're looking for a 2 to 4 unit property, which I personally think is the best first-time deal for a first-time buyer is 2 to 4 units. The reason for that is you can generally buy these deals with 3.5% to 20% down. You can get 30-year fixed rate debt on these properties, so you can get a traditional home loan. They're easier to qualify for than a traditional single-family home because of the income that's coming in from the properties. It's just easier. And if you buy well, you can sell the property or refinance some of that cash out and buy more properties, and you can continue to build a little portfolio for yourself. And now if you go 5 units and above, what ultimately happens, you have to put 30 to 40% down. It becomes much more of a challenge to enter these deals. So I think it makes more sense to start small and scale up. What do you think? Drop below, hit the like button. And if you want to fix your credit, again, we'd love to help you. We really would, at greatcreditfast.com. Greatcreditfast.com. One late payment can hold your score down upwards of 180 points. Think about how crazy that is. You can have an 800 credit score, have one situation, one little problem, and boom, now you're in the mid 600s, right? Don't let that happen to you. It'll stay there for 7 years on your credit report. Go to greatcreditfast.com, book a free strategy session. I'll catch you guys in the next video.